I just shot an hour-long video on Tesla, and as I was going to edit it, I realized my mic was muted the whole time. And on top of that, I closed out my $100,000 worth of calls on Tesla yesterday. We ended up closing these things out for a $56,000 profit. That's amazing. But we could have literally probably closed out about $200,000 today. In retrospect of it all, it's okay. I wasn't even here to trade today, and I knew that I had a ton of meetings, so I was not going to be active and swinging $160,000 worth of weeklies on a day that I'm not trading is stupid. So I decided to close it out. But today, finally, Tesla broke out over $190, and I want to go over in this video why I'm still holding my entire August 16th position, why I think Tesla may reject here, but I do think that we're ultimately going to go to 220, 230, 240 in the next couple of weeks, and really what my plans are overall. About the charts and why I've been so bullish on Tesla. If you want the full deep dive, you can go back and watch the videos that we've been posting the past couple of days. We went over all the unusual options activity that's been happening, as well as this liquidity level. Specifically yesterday, we did a in-depth liquidity level video going over what exactly that means. But we've been watching this level from 188 up to 196. Finally today, boom, get this big breakout into this level. And it's unfortunate, but now that everyone in something you have to understand here that's just unfortunate is that they've been training retail to do this. They've been training retail that every time we come up into 192 and 196, you short it. And this is where I see people commenting on the video and they're like, dude, every time it hits 190, just short, bro. And it's like, you don't get it. Like, yes, it will work, but you have to understand that they're training you and teaching you into believing that, into thinking that every time we hit that level that we're going to reject. And like we said in the video yesterday, they're training you to go short there, to take your profits off there. They're stopping everybody out. And they're, more importantly, all across CNBC and all across the media, they are just shit talking Tesla about how bad it is, about how bad deliveries are going to be, about the Cybertruck recalls, about how slowing growth year over year, all of these things. But the whole time we know that they're buying $300 million in confirmed options calls. So while they're doing the opposite, while they're telling the world how bad Tesla is, they are buying the living crap out of the stock. And so now they know that everyone's going to be short within this level. Oh, dude, you know what? It just rejects every time. And it could reject, but they're training you to believe that every time it rejects here, I'm just going to full port a short here and it's going to blast right through and absolutely murder everybody. I mean, you have to understand that there are so many people who have been short on this and thinking that we're going to get rejected, which could still happen. You guys can see that we're not confirmed yet. But what you will notice here is the fact that they're expecting for everybody to go short at this level, to think that we're going to reject. And then I do believe that we're going to get a move back up to 240, 260, 280. And this lines up like just too perfectly, right? Let's just go back to the weekly. If you look at this setup, we basically have this most recent market impulse from back in December of 2022 up to highs of $280. So what we do here is we pull this all the way out, and the level in which big money is looking to acquire shares and positions is down here. This is called the golden zone, and this is between the 0.618 Fibonacci and the 0.786 Fibonacci. It's just a really fancy way for saying that if we look at this swing low to this swing high, we've pulled back 60% of that impulse. And usually when we pull back 60 to 70%, that is enough of a discount for Wall Street and big money to go in and flush everybody out and buy call contracts up for literally pennies on the dollar. You can see that, especially when we hit, this is the level, this is the secret sauce. I look at the 0.786 and the 0.82. That's really the most discounted range that you can buy. And you're going to notice that that level literally held for less than a week. We had a massive sell-off from 170 in a single week into this level of 147. So that's a 13% drop in a single week, which was followed up by a swing from low to high of 21%. Literally let it drop, freaked everybody out, bought it up for pennies on the dollar, and now it looks like we're going to get this massive rocket. Zooming out to an even bigger chart, which is the monthly. This is a very, very strong chart. You're going to see that the last time that we had this curling on the BX trender, we actually pumped nearly 129% within 181 days. Now, if you guys want to know how to use these indicators, you can just use the link in the description to go check out all of our free courses. The course that goes over these indicators is this market bias course. It's completely free. We're not going to spam you with 100 emails. I'm just sharing with you guys what works because I'm not going to be doing this forever and it doesn't hurt me to help you guys. When we get this curling on the BX trender, it is a very, very telltale sign that we're going to get a massive pump. I mean, if we just go in and look right here, we have this curling back on the 21st, I'm sorry, Wednesday, the 1st of September, 2021. That ended up having a high of about a 60% pump. Even if you would have sold here, that's a 49% return. If we look at this last time, we had this all the way back in 2019. Massive pump until we started to get red. Back down here, that's a 1000% return. And even as of recent, you're going to see that we have this break into that swing high, which is a 64% return. So when this confirms, which this will not confirm until the close of this month. So on the last day of this month, coming in just a couple of days, we're going to see if we close with this strength. And if we close with this strength, I think there is a very easy chance that we will see Tesla by the end of the year, 155 days from now, trading at about $300. And you guys know that I have a ton of call options on Tesla right now, like $153,000 worth of Tesla calls for 816 $190 strike. So I am very, very bullish on this. And I do think that over the next couple of weeks and months, we're going to end up seeing this thing continue to break out. And when it comes to my risk, that position is less than 10% of just the profits that we were able to make within the past 7 months. And I don't say that as a flex because you should be looking at that type of risk management with your account. If I had a $10,000 account, which I actually started a $10,000 challenge in our Discord, that account is down 20% following the same strategies you see here. But because it's a smaller account, you can only take a couple of trades, 4 or 5 instead of 10 or 15 at a time responsibly. But in that account, I have the same calls that I have on my main account, but instead of having obviously $140,000, I have $800 worth of calls. So even on that smaller account, my position on Tesla is less than 10% of my working capital for that account. Because you're not going to be able to hide from losses. I mean, like, there is a chance that deliveries come in terrible, that we have the worst earnings known to man, and that this robo-taxi event is a huge flop. And you can't hide from losses. You guys see that I come in here and I lose all of the time. I have all of these losing days, but it's just that my winning days are much, much better. So trying to hide from the losses is just silly. Like, at the end of the day, you need to accept it. You have to know that they're coming. You have to use proper risk management so that when the bad days happen, you are protected. As always, guys, thanks for all the support. I hope you guys had a great day, and we'll see what happens tomorrow.